You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
It's MSE and I'm Bill Powers. Thanks for tuning in. It's June and we're talking with David Erfle from JuniorMinerJunkie.com for our monthly check-in. David, thanks for coming back on the show. Let's jump right in with your gold and silver price commentary. Can we begin there, please?
Sure. It's been, we had a $450 move in 9 weeks after the major breakout in March. And we're going through now a 9-week consolidation of those gains. And gold's now pretty much in a broad range, a $150 broad range between $2,300 on the bottom and $2,450 on the top. So this is pretty much normal bull market action as far as the gold market is concerned. I mean, we had a major breakout above 13-year resistance at $2,000 with once we had a monthly close above $2,000, that's when we had that $450 move in 9 weeks. And now this 9-week correction of $150 is pretty normal.
Mm-hmm. How do you see the gold miners performing in relationship to the gold price? Well, I heard someone say someone said that the gold was going up, but when the miners didn't, that let them know that the central banks were buying gold, but retail was not into the gold stocks yet.
Well, yeah, I mean, that's what we're missing. That has been the key missing ingredient is retail investment, not only in gold stocks, but in gold also, in Western retail investment. I mean, the gold bull market is in full force in Asia, right? In China, central banks are buying, investors are buying. The gold bull market is in full force in China. But if you take a look at the West, ETF outflows have continued. Inflows began a little bit recently, but outflows continue in gold ETFs. But it's central bank demand that is keeping the gold price up there, and a lot of that central bank demand is coming from the East. So and when you have AI continuing to ramp up higher, and Nvidia now, I think their market cap, I think Nvidia's market cap is now larger than the entire Canadian stock market. So, and you got the Bitcoin ETF has taken a lot of speculative capital out of the mining sector. So it's hard to believe, but the gold stocks have been in a bull market since a major 7-year mining cycle low in October of 2022. Gold stocks have made higher highs and higher lows since then. But it's the junior space that remains, the sentiment remains at rock bottom, and a lot of them really haven't moved much. We've seen a bifurcation take place ever since the gold price broke out, especially in a lot of these silver juniors, because there's really not a lot of quality silver juniors. So the quality silver juniors have been doing really well since the silver price recently broke out above $30. But if you take a look at the mining sector as a whole, I mean, if you take a look at the SILJ, which is the silver junior ETF, it went up 75% in the last couple of months, and it's corrected about 12%. So that's normal bull market action. But if you take a look at a lot of quality juniors that haven't participated, they're still kind of languishing. So it's still very much a stock picker's market. So even though the gold price is broken out, after above major 13-year resistance, and it's in a strong bull market now, the silver price now is starting to show signs of joining gold. The gold stocks have done okay, but they really haven't provided the leverage that they have historically as of yet.
Are you expecting the whole sell in May and go away mentality to take over the sector this summer?
Well, if you take a look at the last 2 years, May and June is when tax loss selling began, especially in the junior space. In those two instances, it wasn't followed by a major breakout in the precious metal sector. So I see this as a normal correction happening here. I mean, we've had the GDX run up to about 3750. It had a solid move from the late March lows, and the GDXJ is also ran up quite a bit, and they've corrected up. Once they corrected about 10%, and then started to move higher again during this move, and now they're in the process of doing the same type of correction right now. I think GDX and GDXJ have corrected about 11% from their recent highs. But if you take a look at the GDX and GDXJ support levels, 32 in GDX is really strong support, and 40 is really strong support in GDXJ, because those were really strong resistance levels in the past before the gold price broke out. So those are in the process, it looks like to me, is being tested. I think they've got 1 or 2% more to go before they've tested there. So, but that is going to depend on the gold price holding that 2,300 level, right? I mean, you've seen that 2,300 level tested a few times, and each time it gets down there, you've seen strong buying come in. And last week, we had the Fed week, right? Which is basically, there's always a lot of volatility in the precious metal sector around a federal open market committee meeting. And last week was no different. You saw the gold price run up to, I think it was 23.58. And then, it bounced around between that level and 2,300 for the rest of the week as the market digested, the Fed speak. So if on the upside, if you see that 23.58 taken out, I think that will be a good case for a strong bottom happening in the sector. But you need to see the gold stock start to show relative strength to the gold price again, and you need to see that gold silver ratio is particularly start trending below 80 again. We had the gold silver ratio get down to the low 70s when the silver price broke out above 30, but now it's back testing that 80 level. 80 is the key level, 80 to 1, where it's 80 ounces of silver equal 1 ounce of gold. So it's back testing that level right now. We need to see that level start to go lower again, along with the miners showing relative strength to the gold price again. And that'll give us a hint that this consolidation is over and we're headed back higher in gold and silver.
Dave, if a new investor is looking at this sector, the gold mining sector, and they're saying to themselves, I want more leverage and upside than like a Franco-Nevada is going to give me. I don't want all the risk of a miner or even some of the producing mining companies. So why don't I just buy GLD on margin or buy one of the Sprott physical precious metals trusts on margin, because therefore I get the leverage and I don't get exposed to all the risks that miners have. What would you say to somebody with this mentality?
Well, whoever's had that mentality for the past few years has done quite well. But as far as having that mentality now, I don't agree with it, because if you take a look at the gold stocks, they're at the lowest price they've been in relation to the gold price in quite some time. Basically, a big reason for that is sentiment. Sentiment remains at rock bottom in this sector, and that's when you accumulate it. I mean, you don't buy gold stocks, and especially you don't buy juniors when they're moving higher. And everybody's talking about them, and all of a sudden we've got generalist investors buying willy-nilly in this sector. We haven't had that in over a decade, and as a matter of fact, we have the exact opposite of that right now. And that's when you accumulate. It could be frustrating and it could be painful, but if you accumulate the right stocks and continue to hold them within the next couple of years, when I feel the gold price is going to be $3,000 and higher, you're going to look back on this time and say, "Wow, it's a really good idea. I had a really good idea in doing this. I'm really glad I did." And I know a lot of people, myself included, have gotten in a bit too early on some of them, but that's okay, because it's given us a lot of time to do due diligence and make sure that we're in the right stocks. And sure, some of them you have to end up giving up on because maybe they mismanage capital markets and now there's too much dilution in the stock, and then the upside is not there anymore. That's the number one enemy of juniors is dilution and time. Time and dilution are the two biggest factors in miscalculating your upside in junior miners. And as far as the timing is concerned, now is it's been a great time all year, ever since the gold price broke out, to start accumulating these things and hold. Are you going to be down 20, 30, 40%, 50% even in some of them while you're accumulating them? Absolutely, because we don't know, when that switch is going to flip and the generalist investors finally start to come into this really tiny sector. And we all know that, a lot of that is dependent on the gold price continuing to go higher. And also for the stock market to start cracking a little bit and people starting to get a little worried about their profits and wanting to protect them. So that hasn't really happened yet. We've seen the stock market still hold on to a lot of these gains, and a lot of the reasons why the stock market keeps going up is because of short covering. A lot of these funds, they come in and they see the ridiculous overvaluations, and they see the inverted yield curve. They know that the U.S. economy is headed into recession at some point, and they try to short the market, and they end up trying to short it too early, and they have to cover. So short covering is a big reason why the stock market continues to go higher.
You mentioned underperforming and disappointing stocks that you hold high expectations for before you get that full bull run. I-80 Gold has disappointed many people, and they've diluted significantly.
Absolutely.
Can you share your thoughts on that? Because that was twice as high on a per share basis a year ago than it is now.
It is, yeah, and that's one where the upside is. I'm a shareholder and I've been in the stock for a while, and my average cost is around $2, and now I'm down 50% on this company
in U.S. dollars, right, Dave? Your cost.
This is U.S. dollars, yep. Yes. And I think around when the gold price failed again at 24.50, we had the gold price run up to 24.50, and then we had some selling, and then we had the gold price go back and test 24.50 again. But it needs more consolidation, right? Because we had that huge move. So I-80 Gold started to move higher when the gold price hit that 24.50 and then reversed sharply. That's when shorts really began to take control of the stock, because the company, it's basically they have to bring three mines into production at the same time to feed their very hungry autoclave, which takes another $250 million to complete. So basically their biggest enemy is capital, being able to raise enough capital to do all this. And so recently they've announced to the market that they're in the process of getting a JV partner for their Ruby Hill operation. And this JV partner is funding all the work necessary for them to gather all the proper information to make sure that they want to do this. And the market has been waiting for this JV announcement to take place. It hasn't happened yet. So the shorts have gotten aggressive because of that. And they also, at the same time, they had to go into the market and raise $115 million, and they had to offer a full warrant, full 3-year warrant at the same time. And that's what really hurt the stock. So all of a sudden, they've got nearly, I think it's 450 million fully diluted shares out now. So that limits the upside. Their projects are still fantastic. They still own this autoclave with a replacement value of over $1 billion, but they've got a lot of debt, and they've got some debt coming due next year also. So they really need this JV partner. They need to show them the market that they have this access to capital. So a short covering positive for the stock would be a positive JV announcement in the not too distant future. And what I would like to see also is this JV partner also taking a chunk of the company as well. That would be positive dilution, because you'd be diluting your stock a little bit more, but you'd be diluting it by gaining a strategic partner at the same time, because that's what they need. Because they need money to build this thing, and and build these things, I should say. Like I said, there's 3 mines they need to bring into production all at once to feed this hungry autoclave. So that's what's been the biggest enemy is in I-80 has been time and dilution, and another enemy of basically showing the market, hey, we haven't secured that partner yet to get for the access to capital, and we've had to take on a little more debt than we've liked, and we haven't brought in production like we said we would on a couple of other projects to cover some of our expenses. So that's another problem. They haven't ramped up production at these at Granite Creek, and like they said they would, that would cover some of their expenses. So they've had a lot of problems, a lot of issues. I know that figuring out that the CEO, Ewan Downey, who's is a high profile CEO, he's his father's a mining legend in the business, so it's not like these guys don't know what they're doing. But they've had to issue a lot of debt and a lot of shares now, and they've frustrated a lot of shareholders. And I know recently Equinox Gold, who at once had a 19.9% interest because of the Greenstone project, where they sold they ended up buying I-80 spun out these projects they have now when Equinox took over Greenstone. So they had a 19.9% position, and they had been liquidating it. They've been liquidating chunks, and at the beginning of June, they got rid of the rest of their position, which I think was about like 45 million shares. So all this
in
is
the open market or block trade, Dave?
It was a block trade. They didn't sell it in the open market. I think Orion may have taken some of it. I'm not quite sure. But basically, the market is waiting to find out news on this JV deal. And in the meantime, the shorts have gotten really aggressive. So if you're looking to take a position in this stock, I would because it just made another all-time low last week. It's trading around $1 US now. So it's got that MX US listing, which like I said, which has made the shorts aggressively short this thing. So what you want to do is if you want to take a look and see if it starts bouncing with volume. And once it starts bouncing with higher volume, that will be an inclination of maybe insiders and people in the know knowing that this JV deal is finally been cemented and it's about to be announced. Because what always happens, these things get leaked. So if you're looking to take a position, that's what I would do to start looking for a situation like that in this stock.
And then you hope the recovery starts with a short covering, right? So you got a little gusto out of the gate.
Exactly. I mean, that's how all bear market moves end, right? Is with short covering. I mean, if you take a look at the sector as a whole, in late 2015, early 2016, the shorts had made a killing in this sector. The GDX had gone down 85% from its peak in 2011 to its trough in late 2015. So once they started to cover and take their profits, that's what started the bottom. When the gold price failed to move below $1,000, the Federal Reserve announced the first rate hike, and the gold price went from 1045 to 1350. But the GDX and the GDXJ went up. I think they almost right around tripled within 6 months. And a lot of that started with short covering. Short covering starts these moves, and then value investors waiting on the sidelines, waiting for that spark, they join in, and that's what turns a bull market into a bear market into a bull market. It always starts with short covering. So in the past you've heard these politicians say, we need to stop short covering. Well, I'm sorry, short covering is a part of the market. It's healthy, it's necessary, because like I said, when these bull moves start, they always start with short covering.
Dave, when you look back over your junior mining investing career and you think about all these little juniors you invested in, have you been more successful when the lead executive had a geological background or a finance background? Have you quantified that? in your own experience?
It's always when they've had a company building background, and if they have a successful company building background, and also a broker background, if they're a former broker, so they're successful in building a junior from the ground up, but they're also understand how important share structure is, and how important getting a big board listing is as well. So, I've talked to a lot of these companies till I'm blue in the face, and I know it's expensive, but they need to get these U.S. big board listings before the generalist investor comes back into this space, because once they do, the first things they're going to get into, and the easiest things to get into, are these juniors with big board listings. Because a lot of these generalist investors, they just have Robinhood accounts now, or the older ones, they just invest using their retirement accounts, and they can't invest in over-the-counter stocks.
Under $1 too, right?
Under $1, absolutely, yeah. Yes. So you've got a big board listing, and the switch flips, and the generalists start coming in. They're going to start coming into those stocks first. And then once they get over $3-4, funds will be able to invest in them also, and then they'll be able to go even higher. And if they've got a tight share structure to go along with that, that's when it really gets fun.
Are you still avoiding explorecos right now? You were last time we talked.
Absolutely.
Okay.
Yes. I mean,
there's a lot of emotion behind that response, Dave.
For a couple of years now. Yeah. I mean, it's just, you take a look at what's available for investment, that these juniors, what they've already accomplished with the drill bit, and these economic studies they've come out that are positive, and they're in safe jurisdiction. They've got these multi-millions of ounces. They've proven up, they've shown there's blue sky potential. They're in safe jurisdictions. They're in district scale size land packages. They've done it before. They've taken, they've made shareholders a lot of money in the past. They're aligned with shareholders. They're buying in the open market. They're buying in all these private placements. And then you take a look at exploration companies with just the promise of maybe hitting something, with maybe a 5 million ounce recent finance with, maybe a 5 or 10,000, meter drill program. I've got no interest. Sure, every once in a while you're gonna get a snow line, but the odds are pretty crazy of you getting into something like a snow line and not losing a lot of money on other explorecos at the same time. It's basically I look at the developers, explorers that have the attributes of what I just listed. I base that as like sitting at the blackjack table and knowing what the dealer has as their whole card. So that's how I look at investing in a lot of these junior developer explorers that I'm in. But if you're investing in an exploreco, that's an early stage drill play. They're not even close to a PEA stage, or they don't even have a resource or have a proven resource yet. I mean, that's like going to spin the wheel in Vegas and putting everything on one number, or going to the roulette wheel and just putting everything on one number. That's a huge gamble. So I like to be able to do a lot of due diligence on a company that's already proved up something, and they prove to me, not only me, to the market, that they've done it before. A lot of these companies that I'm in, they've made me a lot of money in the past. These management companies with former companies. So I'm more familiar with that, and I think my chances are a lot better. It's a high risk sector as it is, so I don't want to take any more risk than I have to. And if you're investing in these early stage explorecos, especially recently, the financing window is open a little bit, so a lot of these companies have been able to finance $3, $4, $5 million, but that keeps the lights on for them, and it only gives them enough money to drill maybe 5 or 10,000 meters, and they're still looking for something. So so that also it's a great way to weed out a lot of these companies, right? Because there's so many of them. And you're basically what you're trying to do when you're creating a basket of something to hold while you're waiting for the sector to turn, is while you're doing that, you want to make sure that you're holding the right companies. You don't want to take a flyer on some of these companies that aren't even close to finding anything.
If you like with that risk reward explanation, it makes sense. But you've traditionally avoided prospect generators, which is a way to play exploration in a less risky way. Would you consider, with what you just shared, playing prospect generators now, or are they too boring for you? Because it wasn't
I wouldn't say boring, but let's say they've a lot of these prospect generators, if they do finally find something, they don't even own the whole thing. I want to invest in a company where they own 100% of the project, right? And then maybe down the road,
100% of the downside too, right? Works both ways, as you just explained.
That is absolutely true. But these prospect generators, they're looking for something. Also, they're still looking for something. So I feel more comfortable being in something that they've already found something. They've already found a big something. So that's just the way I feel about it. I mean, I've invested in prospect generators in the past, and I've never had good experiences with any of the ones that I've invested in. So this is my personal experience where I'm like, you know what? These prospect generators, I've never made money in them, and I think I'm just going to avoid them. I think there's money to be made elsewhere in different subsectors in the junior space.
So Dave, if you invest with company builder CEOs that have made you money in the past, would that same, I'll just say, emotional attachment or historic relationship also perhaps be a little bit of a blinder when it comes time to maybe selling, or you end up selling too late, some of these juniors?
Absolutely. That's happened. It happened earlier this year in a company. There's a company, I'm going to tell you which one it was. It was Serato Gold. Mark Brennan, the CEO, he helmed a company called Desert Sun Mining when I first got into this sector. And I did really well with the stock. I think it was like my first multi-bagger. That's going to stick in your mind, right? Who made you your first multi-bagger? So I came across, I followed him for a while, and then I was watching him, and I really liked their Monte de Carmo project in Brazil. And he even said, this is the best project I've ever been associated with in my career. And management owned like 15% of the stock. They were completely aligned with shareholders. Very conscious of dilution, and the share structure. They kept it tight. I got myself and my subscribers in the stock at what I thought was a good price. And just late last year, I had a conversation with them at Beaver Creek, and I know they were looking to raise money. And they needed money, and they were going to raise $8.5 million. They said, we're looking to raise $8.5 million. We got some leads on some things that look like we're probably going to wrap it up pretty soon. Well, they never pulled the trigger on it because the stock, it usually happens after Beaver Creek. There's a Beaver Creek curse, right? Beaver Creek happens, and then these juniors start going lower into tax loss season. So the stock started to move lower. And what I think happened was they had these deals on the table, and it would have been too much dilution, so they decided not to pull the trigger. Well, it not only ended up costing them more dilution down the road, but it cost them the Monte de Carmo project, because this project had already had a definitive feasibility study. They were waiting for permits, I think it was, and they were looking at financing packages, and they were doing, they were going through the motions of getting a financing package. Well, they ended up having to sell the project to keep the company afloat, because they have a producing project in Argentina, and in Argentina there's capital controls. So anything you work on, anything you're doing in Argentina, it remains in Argentina. All the money, you can't use the money for anything else. So basically, in long story short, is this management team being so aligned with shareholders and having so much stock They ended up shooting themselves in the foot because they didn't want to over dilute themselves, and they mismanaged capital markets. So there's no sure thing in this sector. You could come across a junior that you look at it and you go, oh my God, this thing ticks every single box. And Serato was like one of those companies, and something can go wrong. That's why, I never put any more than 5% of my investment capital into one company, because no matter how fantastic a project looks, there's always something that can come along and bite you in the butt. And that's one of the things that I love about this sector, because it's the ultimate challenge. If you can make money in this sector, then that's saying something.
Dave, I've heard you talk about and contrast the gold miner bull market of like 2008 through 2011 with now, and how it's different. But even if you consider where we are in 2024 versus that 6-7 month bull market we had in 2016 when I started, what are some of the key differences between now and 8 years ago?
A big key difference is capital's no longer cheap. That's a big one. And another key difference is Bitcoin has sucked a lot of money out of the sector. Also, when you saw the gold price going sideways, from mid 2020 to just recently, inflation was going out of control. So, it was expensive for everything to, as far as the gold price was concerned, getting it out of the ground, producing it, exploring for it, building a mine, everything was going up, but the gold price was going sideways. So that's pretty much taken sentiment to the rock bottom level that it is right now. But I think one of the big differences is that capital, that cost of capital is more expensive now, and these banks are just not doling it out willy-nilly to any junior company anymore. They're being more selective, and it's also, cost of capital is a lot more expensive than it was then.
And these things don't exist without capital, right? Because most of them don't make money.
Right. Juniors do not throw off capital. They destroy it. They constantly need money. They're constantly, needing to raise money. So if they're not good stewards of their capital, their share price is going to continue to go lower, no matter how many ounces they proved up in the ground, which we found out.
And Dave, there's so many variables, even as you explain, that CEOs dance with the financing markets, right? Like, I don't want to dilute, and then you don't dilute.
Absolutely.
And
absolutely. And you've also got to deal with the street, because since the retail money fled this sector in 2012 and is yet to return, there's no, I don't like to use the term dumb money, but it's the only term I can use. There's no retail in the sector that takes a look at, they look at a drill result and they go, oh, wow, that's a great drill result, I'm going to buy the stock. When that's not there, the street can look at that same press release and say, wow, that's a great drill result. How much money do they have in the bank? Oh, they're going to need to raise money in 6 months. Great project. I want to get into the stock, but let's short the hell out of it now. And we know they're going to need money. So let's wait for the stock to get cheaper. We can get a half or a full warrant, get in cheaper, and then strip the warrant 4 months later. When you're a retail investor, or you're just a generalist that's discovered this sector, you don't understand all those things. You're buying stocks because you're buying juniors because, hey, that's a really great drill result. I understand, what a good drill result is. I read enough to do that. And that's a good jurisdiction. And look, the management team's really good. So, you've done your due diligence in being able to do the proper due diligence, right? You're looking at a checklist, you've learned some things from newsletter writers or from whatever, and you're doing the right thing, but you haven't factored in what the street knows and what the street's doing, right? And that's what's happening with a lot of these companies right now. A lot of these drill results that are coming out. Just last week, I have 3 juniors that put out fantastic drill results that are near-term mineable drill results, meaning there's already gold mines there. And these fantastic drill results with, high grades and wide widths, they're going to be mined pretty soon. The market ignored them.
Are you more confident in your thesis? Do you buy more at that point?
Well, I'm pretty much all in. I bought more recently. I bought more recently a couple of weeks ago. I added to a few positions and started a new position that are continuing to do well. But yeah, I mean, you just kind of just shake your head and go, I'm not going to sell. Sure, my stocks are going a little bit lower, but it doesn't make any sense to sell.
Do you have you use stop losses, but do you have your stop losses turned off right now, Dave?
No, I don't use stop losses. I use mental stop losses.
Mental stop losses, yeah.
But pretty much, I mean, I sell something because if it's company specific, a company's doing something that I don't like what happened with Serato, right?
Well, what happened if the street is doing something to one of your miners that you don't? If the street is doing something to one of your miners that you don't like, would you consider selling for that reason?
No. That's helping them. No, because I have a long-term view. Right? I'm of the belief that the gold price is going to be over $3,000 at some point by next year, right? So if that's the case, and I look at what these stocks have, what they proved up, what they're selling for an ounce in the ground, all this, I take all those variables in. I'm like, I'm down 30-40% on it, but why should I sell it? It doesn't make any sense. The only reason why I would sell it is if I think the gold price is going to go a lot lower. Right. And then, and all of a sudden that these strategic partners that these companies now have, they're going to go away.
Dave, when you mentioned gold ounces in the ground, don't you think the valuation that's given to these companies, a lot of investors are a little more savvy in terms of the type of gold ounces, is it permitted where it's at versus like 2011, right?
Oh, absolutely. That's a whole other conversation. I mean, permitting is huge. I mean, that's the number one reason holding back a lot of these stocks is permitting. These North American jurisdictions, they're fantastic jurisdictions, right? They're top tier jurisdictions. But then you look at how long it takes to permit a mine. If this company hasn't started the NEPA process, the environmental process in North America, in United States, and they're not going to be fully permitted for 3-4 years down the line, nobody's interested in their multi-millions of ounces in the ground, no matter how high margin they are. So you have to factor that into your calculations of how long you're willing to wait.
And who they have to deal with, right? Like you're dealing with the forestry service.
Exactly. Right. Then you take a look at some of these West African jurisdictions that are technically risky, but give the government 10% of your mine and you can get fully permitted in a couple of years. Right? You could go from, you and I experienced that with Osino in Namibia. They made a discovery and then this proved up millions of ounces. The project became shovel ready within 4 years. That's unheard of in North America to become shovel ready in 4 years. And during the last bull market, into 2011, I don't even remember having to deal with concerns about permitting. Nope, that wasn't on anybody's mind, right? It was just ounces. How many ounces can we add to our growth profile? We don't care how much we have to pay for them. We just need ounces. And it ended up destroying the industry. They ended up having to, they overpaid for bulk tonnage ounces that weren't going to be profitable until the gold price was over 2,000. The gold price had already gone from 255 to 1925 in a decade, and they had just expected the gold price to continue to go higher without a correction.
That's that old Allied Nevada deposit, right? Like tens of millions of ounces.
Right? And they were paying over $1,000 an ounce in the ground when gold was at over $1,800 an ounce. They were paying over $1,000 an ounce on the ground. Now, gold is over $2,300 an ounce, and same types of projects they were paying $1,000 and $1,200 for are trading at less than $10 an ounce.
So that's your valuation comparison and why you think we're at a rock bottom, right?
Exactly.
Yeah.
It's like, I'm down, like I said, I'm down double digits, 30, 40, even 50% on some of my positions. Mm-hmm. Would I sell them? No, it doesn't make any sense to sell them.
Yeah.
Right? It just doesn't. Would I buy more? No, I wouldn't buy more, but because I've got large positions already for as far as my situation is concerned. I've got full positions in a lot of these companies, and like I said, some of them are down double digits, but I don't really care because I know I'm pretty sure that the gold price is going higher. I mean, we've talked about these catalysts in the past, or my reasons to believe why the gold price is going higher. So I know that these majors, they're going to have to replace the ounces, right? I mean, these majors have done a great job of shoring up their balance sheets, right? I mean, they've got the majors and mid-tiers have got the healthiest balance sheets I've ever seen since I've been in this sector, and a lot of them are paying dividends. Now they're going to have to start focusing on replacing those ounces. And in order to do that, they're going to have to buy up some of the juniors that I own. And I'm not going to sell those stocks now because I'm down on them. Like I said, the amount that I'm down on them, because I don't have the patience to wait. I had the patience to accumulate at the bottom, but I don't have the wherewithal to sell at what I believe is near a bottom. I mean, that's when you accumulate, all right? That's the risk you take when you accumulate, at what you believe to be a bottoming process in the sector. If you wait to start accumulating when it's going higher, then you have to worry about major corrections and thinking, wow, did I chase something and I better sell it because it could go back down to those levels that took place before, when I should have bought and didn't. I don't know if that makes much sense, but that's the way I've approached this sector in the 20 years that I've been in it. I mean, you have to buy fishing lines and sell rhino horns, not the other way around. And when you're buying fishing lines, a lot of times these falling knives can fall a lot farther than you expect. But you have to factor that in to your premise when you're buying them. Am I buying it for a quick turnaround, or am I buying it to hold until the gold price gets to a point where the generalist investors are finally going to start to get into the sector? And I think we're pretty close to that.
Dave, you shared a lot of insights and your philosophy on how to make money in this sector in this interview, and that's what you do for your subscribers. You limit it to 500. Where are we at in terms of full booking of that subscription service?
I'm very fortunate to have averaged around 300, even during the past few years, which have been not the best in this sector. So I'm very fortunate to be around that number. And I believe the reason why I still have that many subscribers is because I provide a lot of information. I give subscribers a complete macro picture update of what's happening in the world. Not only any news story that I feel that is going to affect the gold price, I link in my weekly updates, and I give them technical updates on what's happening in the sector and what's happening with each of the positions that I own. They know exactly how much I've lost, how much I've made on each position. It's a high net worth real money portfolio that I share with my subscribers, and I also share my retirement account info as well. That's where all my mining stocks are. So I have a large collection, a high net worth portfolio of a basket of miners. Also, they've been doing a lot better than the juniors. So I provide that information with my subscribers as well. I break down all the press releases of all the companies that I own and that I recommend to my subscribers. If they're good, if they're bad, what it means. And also I have a list of 20 watch list juniors that I have that I'm prepared to get into. If I sell something, I have to sell something for a loss, or if I end up selling something for a large gain that gets taken over, or I feel the company is becoming an acquirer now instead of a company that I expect to be acquired. I mean, there's so many different reasons to buy and sell a stock. And once I sell something, I have a watch list of 20 juniors that have been vetted that I try to keep up on top of as well. So if I have to sell something, then I have a pretty good idea of what I'm going to replace it with.
Excellent. And you enjoy doing this, is what you told me.
Absolutely.
Yeah.
I mean, it's my life. I mean, I work, 50, 60 hours a week doing this because I love it. I mean, I love engaging. I engage with my subscribers as well. They're all wonderful people, and they all ask intelligent questions. And it's just something that I really enjoy doing, and you really have to, because it's a lot of work, and it could be frustrating, and it's very, very challenging. And like I said, if you can make money in a challenging sector like this, then it's very satisfying.
Well, go to Dave's website to learn more, juniorminerjunkiewiththey.com. And if you're interested in Dave, but maybe you're not willing to take that leap to subscribe yet, he does have a free weekly email list on Friday nights. He sends out his weekly commentary for gold and silver. You can sign up for that at his website. Dave, always appreciate your insights, and I'll be reaching out to you for a chat again on the show in July.
Look forward to it, Bill. Always great talking to you. Thanks.